How to make easy money in the stock market. What is going on, guys? We are over here for a rare whiteboard video, a video we really do not do that often anymore. And I was thinking and I was looking back at the videos I had done recently, and I saw I hadn't done a stock analysis video in really quite a while. I don't think I've done one, if I'm remembering correctly, since right after I did the podcast with Nick. So originally that's what this video was going to be. I was going to look into another stock and break down that stock and really kind of give my 2 cents on it, my thoughts on it. But I am going away this upcoming weekend, so by the time you're seeing this video, I'm actually already back. And I decided I didn't have the amount of time to put, I guess, adequate amount of research in where I felt comfortable speaking about that stock. So I decided to do a video like this instead. How to make easy money in the stock market. And in this video, I'm gonna talk about a few different things, basic things, but different things where if I see all of these things in a stock, that's when I go out and say, okay, I believe that this is an easy money stock. Now, 2 things really quickly, just to get them out of the way. First, I am not a financial advisor. None of this is financial advice. This is strictly for entertainment purposes only. Second, when I say easy money stock, what do I mean? Well, I mean that there is a 95+% chance probability that I am going to make money, double my money over the next few years. Obviously, nothing's ever guaranteed. There's no investment where you're like, all right, there's a 100% chance I'm going to double my money. But the name of the game is putting your money in the best places possible so you can turn your money into more money. That is an easy money stock, in my opinion. That's how I define it. So hopefully you guys enjoy this. Hopefully you guys get a ton of value out of this. If you do, all I ask is you guys drop a like on the video. That really does help out the channel and really help the channel grow massively. The first thing I see in a stock, that I see in a company that will allow me to consider that stock, that company, that business, a easy money stock is the business model needs to be a needs-based business. Now, what do I mean by that? When I say needs-based business, I don't necessarily mean that people need whatever that business is providing to survive. I just mean that that business model, that product, whatever it is that that company is offering, that is not going away anytime soon. A good example of this is the almighty Amazon. Now let's say today Amazon just decided to disappear right out of thin air. Well, people are not going to die because they can't order things from Amazon. There's other alternatives. You can go order clothes from a different retail store. You can go get your groceries from Walmart. You can go get your prescription from Walgreens or CVS. It's not a needs-based business. But at the same time, how many people really use Amazon and how many people are going to suffer if Amazon were to just disappear like that? The answer is a lot, because the majority of people do order a lot of stuff from Amazon, and I don't see that going away really anytime soon. And I was actually a little curious about these numbers, so I did a quick Google search. Amazon has about 300 million shoppers, as well as 150 million Amazon Prime members. So, needless to say, I think Amazon is a very safe stock at this point in time, given those numbers, because I don't see those numbers declining at any point in the near future. And then on top of that, when you look at things like e-commerce sales reaching over $4 trillion in 2020, and they are projected to grow another $1 trillion in sales by 2022, on top of just being observant and seeing almost everyone using Amazon, like I just said. Like, for example, say you go to a friend's house, is it really that uncommon to see an Amazon Prime truck pull up and drop off a package? Or say you get to your friend's house, is it really that uncommon to see an Amazon package just sitting there on the doorstep? It's really not, in my opinion. I personally see it all the time. And the most important thing about this, I feel like I already said, is I don't see this trend. I don't see Amazon's business going away anytime soon. For example, you can make an argument that Zoom, for example, is not going to be around forever, because that's not a needs-based business. You can argue there was a lot of pull forward from the pandemic. You can argue all of these things because the pandemic is not going to be going on for, hopefully, the next 10 or 15 years. So the argument that Zoom is very important right now and might be very important over the next year or so, unfortunately, is valid in my opinion, but you just can't make the argument to me that I can really see Amazon not being around for the next 10 or 15 years. I just don't see a way that Amazon is not growing over the next decade plus, to be perfectly honest. It absolutely blows my mind how much growth is still ahead for this company. And even me personally, it's getting to the point where I'm like, okay, I can't order this on Amazon, so I'm very inconvenienced and I actually have to go out into the physical world to find whatever product I need. The second thing up on this list is there needs to be some really solid growth coming for that company. Now, when I say insane growth, I don't mean that that company needs to be growing, say, triple digits for the next decade or so. I don't mean that at all. But I would like to see that company growing double digits in revenue for around the next 5 years or so, give or take. And again, for this, we will take Amazon as an example once more, because Amazon has, like I already said, has so much growth ahead of that company. It's really hard for me to imagine a day right now, and it's hard for me to figure out when Amazon is not going to be growing revenue double digits wise. Never mind when Amazon is not growing in general, because at some point, there is going to be a limited amount of growth. They're just not going to be able to grow as much as they are right now. But I can tell you, that day is very far into the future, and I honestly don't know when that is. And this is why I think Amazon is such an attractive risk reward right now, because it's just so hard for me to look out 5-10 years and just see a place where Amazon is not growing at this point in time. But I don't just want to look at the company itself. I also want to look at the industry that that company is in. I want to look at their competitors. But say there's something like Amazon that's projected to grow double digits plus for however many years. Then on top of that, I go and look at the e-commerce industry and I see how that's projected to grow as well. And I think the e-commerce industry has a compound annual growth rate of around 18 to 20% or so. So you take the leading player in that field, you take an 18 to 20% compound growth rate on top of double-digit revenue growth for as far as the eye can see. All of these things I'm thinking about, and it really becomes very attractive to me. All these things play into me categorizing a company as an easy money stock. Number 3 up on this list is that the company is undervalued. Now, of the 5 items up on this list, this is probably going to be the most complicated in my opinion, because there's some stocks you can look at more like value stocks. It's very easy to run some numbers, and it's very easy to look at the forward PE and look at market trends and really dictate if that company is overvalued based on its current stock price. But then there's some companies, it's a little bit harder to look out, say 3 to 5 years and say, is this company really overvalued on a long-term basis? Now keep in mind, you're gonna have to take all of these things into consideration. There's a lot more that goes into it than just what I'm about to say. But generally, a simple rule of thumb is I like to see a forward PE under 40 for a company, like we already talked about, that's growing double digits revenue plus for years and years and years. A good example of this is Facebook. Facebook has a ton of growth still ahead of it. It trades at a forward PE of around 30. I'm not sure exactly where it is at the time of me filming this, but it trades at a pretty cheap forward PE. It doesn't trade at a premium like some of these other companies. It's definitely the most undervalued of all the big tech companies, that's for sure, at least in my opinion. Between Facebook, WhatsApp, Instagram, they also have Oculus. I think that's going to be the next big thing in there. You can make a very solid argument, and I'm in this camp, trust me, I've talked about it many times before, about how Facebook is still undervalued to this day, even as it approaches $400. I'm honestly not gonna go into too much detail on this one because this one is a lot more complicated, and I think I could make an entire video on its own just about how a company is undervalued and how I value a company, and I think I might do that because I think a lot of people are gonna get a lot of value out of it, to be perfectly honest. Number 4 up on this list is that the company needs to have a proven track record. First and foremost for this one, the company needs to be continuously innovated. Are they a one-trick pony, or are they coming out with new products? Are those products being received well? All of these things I need to look at over a period of so many years. How is that management team, and that's what it ultimately comes back to, the management team, how is that management team executing at the end of the day? Does this management team have a proven track record? What was the CEO doing before he was working for this company? What does the VP have to say about the new products coming out? How did they respond during times of adversity? And ironically, we have the ability to go back to 2020 and see how these companies responded during this time of adversity, because while this virus was really running wild, a lot of companies had to, I guess, limit their growth. Some had to shut down. It was not a fun time for a lot of these companies, but key thing is you have to remember it's going to depend on the specific company. You look at something like Amazon, you can make an argument that Amazon had a lot of pull through or pull forward because of the pandemic. Obviously, they still struggled because they didn't have enough employees and they were hiring left and right. But as from a demand perspective, it's very hard to argue that Amazon did not thrive in this situation. Another good example is Zoom. No one can really work in the office during 2020 because of this virus. So you can make an argument that Zoom had a lot of pull forward because of the pandemic. A good example in this situation would be something like some sort of restaurant. How did that management team from that restaurant really respond when restaurants were shut down? Did they raise money? Did they have to cut their overhead? What did they do to stay afloat and stay alive and maybe not grow revenue, but to keep that balance sheet intact, to make sure everything is where it needs to be? A good example of this would be the Cheesecake Factory, I guess. The Cheesecake Factory did a phenomenal job, in my opinion, of raising money. That management team really executed. They were really able to pivot to a point where they were able to get through the pandemic or get through that patch last year when everything was shut down. And I thought they did a great job. But you really want to go back to those times of crisis, and if it wasn't 2020, go back to whenever that management team faced those times of adversity, because me personally, I want my money in places behind people that are going to be able to pivot and innovate overnight when necessary. And the last item on this list to finish up here is I need to see the vision that this management team has for this company. So for example, you can go back 5 years, and I think it's very easy to see, and obviously hindsight's a beautiful thing, but I think it's very easy to go back 5 years and see what Amazon was trying to do and where Amazon was going to go over the coming years. But let's say I did not see that vision for Amazon. If I don't see that vision, it's going to be very hard for me to really put that stock in the easy money stock category because I don't see the vision. And frankly, it's going to be very hard and nearly impossible actually for me to invest in that company, because if I don't see that vision, I don't see where that company is going over the long term and where that management team wants to take that company. Why would I put money into that stock if I just don't share the same vision? Some of these stocks that people bring up to me, they'll say, I just bought this stock, I just bought XYZ stock, I just bought ABC stock. And I'll say to them, I'm like, oh, that's interesting. I've never heard of that stock. Where do you see that company going over the next 5 years? What products do you think they're gonna come out with? How much market share do you think they're gonna take? And a lot of the times, not all the time, but a lot of the times, people just look at me like I'm crazy, to be honest, which indicates to me that these people that are talking about these stocks are more so gambling rather than investing. But if the management team is really telling me a great story and I see where that management team wants to take that company, I see the vision, and I take all these things into consideration. I think that business model is a needs-based business. I think there's great growth ahead of that company. I think the company's undervalued. And I think that management team has a proven track record based on all of this work, because none of this comes without work. There's no one size fits all. There's no one article that you can read and you're immediately going to understand everything about the company. It takes a lot of work, and frankly, it could take weeks of researching a company to get to this point where you put a stock in the easy money stock category. It does not come overnight unless you're just a full-time stock picker, which I also would not recommend for a lot of reasons I've already talked about, but that is besides the point. So those are 5 reasons, 5 ways, and 5, I guess, pathways you can say that I check off to really put a stock in the easy money stock category. So those are pretty basic. I think everyone was able to follow this. I really hope you guys got a ton of value out of this. If you did, please drop a like on the video. That really does help out the channel and really helps the channel grow. Also, remember to subscribe as well if you want to see more videos like this. Let me know what you guys thought of this. I really thought this was really good because people hear me talk about things like Facebook's an easy money stock, Amazon's an easy money stock, but I've never really talked about how I put those stocks in the easy money stock category. So let me know down in the comments if you got any sort of value out of this. Let me know if you'd like these whiteboard videos and you want to see more videos like this. Thanks so much for watching, guys, and I'll see you guys in the next video.